Mikey, and this is
Hey, I'm Tyler.
we're the founders of Innovative Starts, also known as ISO. ISO is a nonprofit organization that teaches financial literacy to students and young adults. Our goal is to educate, not persuade. And yeah, we're going to use this platform to discuss all things financial literacy or topic wise. Today, we're going to hit on a few things and touch bases on some of the things we talked about in our last video. But yeah, to get started, we'll just go ahead and get into it. So, really, in our last video, we talked about budgeting and inflation and how those tied into real world issues and things that we can, you know, do to manage as far as fighting inflation and then creating healthy budget options. But yeah, so really the big thing that we want to do is always make sure that we're giving you the best information and allowing you to do your own research to make the best decisions. Uh, One thing that we did talk about, which is related to budgeting, is saving and different saving options. A lot of times when people think about saving, they think about just putting that money to the side. Um, some old techniques, I guess, like some things people refer to as like putting money under the mattress. Um, what happens when you don't put money into an account that has interest, also known as like high yield savings accounts, or any account that just gives you some type of money back on top of the money that you store with them. In general, inflation hits your money as hard as possible, as far as you're not going to be able to have the same purchasing power if you're letting your money sit. So you put $100 in your regular savings account, a year later, that 100 is not going to have the same purchasing power. But if you put it in a high yield savings account, then you're looking at a different option of fighting into that inflation and having the same purchasing power come a year end. Um, I think these are some of the things that we really hit on. A lot of students don't really know that. Like I said, like either you're spending your money right away as you get it, or you're just putting it in your savings account with no interest. But yeah, Tyler, what do you think about that? What are your opinions
Yeah,
on savings?
I was just gonna say, like you mentioned some good points. Inflation essentially is the whole my grandparents could buy a carton of milk for whatever, well, a dollar way back in the day. And
Mm,
so anyway, and saving is a great way to get ahead financially instead of just spending all the money that you make throughout the month on new clothes, shoes, cars, whatever,
mm,
saving. Dave Ramsey, some other people will mention, there's a certain amount of savings you should have in your bank account. Those are all opinions. There's not a certain amount.
right.
Um, but saving is good because if unfortunately I got rear-ended 2 weeks ago, that's going to cost some money. If I didn't have a savings account, I would, it would be in a bad scenario. I wouldn't be able to afford that and pay for that. Um, so savings accounts are great. What Mikey is mentioning about the interest. So essentially, banks, what they'll do is they'll pay you to have a savings account. Now, some banks, it's a fraction. So this is just for an example, but you could have a few $100s in the bank account and they may only pay you a penny a month in interest. But what Mikey was saying was high interest savings accounts. You'll and do some research on this, but there's some savings accounts that will give you more money for keeping your savings with that specific bank, if that makes sense. Most of the time, these are online banks.
Mm,
And also note that for these savings accounts, there's restrictions for how many times you can pull money out of those accounts. So for my bank account, I do not have a high yield savings account. For my normal savings, it is, I think, six transactions or six times that I can pull money out of my savings to use for whatever I need. My goal is to have, it's just for me personally, to have a certain amount of money in savings that I can reach in my bank account, my consumer bank account, and then have a high yield savings account for emergency funds and things like that.
yeah, no, those are really good. I think some other instances of having a high yield savings account is like minimum amounts too, to open an account or how much you need to have in there in order to qualify. Most times they require a minimum amount. Obviously, again, like we're saying, it's the bank saying, hey, if you store your money with us, we'll go ahead and give you some interest on top of doing that. It's a really great tool to have. I think in general, it's better than letting your money sit and letting inflation get to it. Um, but savings is also something as far as like if you want to hit your goals, and that goes in particular to budgeting as we last discussed. But if you have a short-term or long-term goal, there's obviously no certain amount that you should, say, oh, this is how much I should have in my savings. Most people say, oh, I put 10% of my, paycheck or, whatnot. But really what your goals are, what your expenses are. Um, some people even have like the thing of having, 2 to 3 worth as far as like your amount of your expenses that you have on a monthly basis. So that could be rent, insurance, or whatever, just to have a little safety net. And then that kind of gets into some of the other topics that we want to talk about, especially as far as like interest rates go. So, recently, the Federal Reserve has increased interest rates to combat inflation. Heavily, heavily, heavily discussing inflation as a very important topic. The Federal Reserve does not work as a government entity. It's its own separate thing. I think a lot of people get confused with that. The Federal Reserve puts into place different policies, whether that's like interest rates, mostly how much money is in circulation, etc. But a lot of the things that they do are monetary based. Inflation's impact anybody from the consumer level all the way to the business level, and depending on which way those interest rates goes, the impact can be, to a higher or lesser degree in its effect. But yeah, so overall, as far as like what people hear when they hear interest rates go up, you don't really know what that means to you as a day-to-day consumer. But overall, too, you can look at it as your financial planning aspect. If you were planning on, say, buying a house, um, going and opening up some new line of like credit, which is also known as a loan. But those interest rates can impact how much interest is going to be charged to you at that point. When interest rates are higher, right? Obviously, you're looking at more money that you'll be paying over time. So let's look at it from a very simplistic view. Say you get $100,000 loan towards something, right? House, car, whatever. This higher interest rate is going to impact you in the sense that, say it was 5%, now it's been raised to 10%. These are obviously just general examples. You'll be paying the difference of, say, on a monthly basis, right? That 105, or say we can say yearly, we'll say annually. That could be 5,000 versus 10,000 more you'll be paying in that sense. Um, but yeah, so I think there's a lot of misconceptions as far as like what the Federal Reserve does and what interest rates mean when they are made higher or lower. But overall, I think having a general understanding of what that means for you as a person and how you can help set yourself up to, look out for certain interest rates that might impact you in the future. But I'll pass it over to Tyler to talk more about some of the Federal Reserve aspects. Obviously, we've talked about these things too, and the misconceptions, but yeah, go ahead, Tyler.
Yeah, that's all good things. The Federal Reserve is a very interesting topic. Um, I will try to stay unopinionated on this. I just highly recommend that everyone, if you have time, to just research the Federal Reserve. This impacts us all a lot. There's a lot of misconceptions, especially with social media. Something is going on with the current administration in the United States and pressuring the Federal Reserve, and if that can even do anything. And just highly recommend you all be able to research this. We are not able to go over this all today.
Hmm.
What's really interesting though is the Federal Reserve essentially is for lack of better words, the United States Bank. If you want to, if we want to kind of put it in a categorize it. So the Federal Reserve is over here, and the Federal Reserve basically has liquidity, um, which is just a sexy way of saying cash or money that it lends out to banks around the United States. And the Federal Reserve funds rate, I think is the technical term, is the interest rate at which the Federal Reserve lends money to large United States banks. And these banks go on and they lend the money out through car loans, phone loans. I just had to get a new phone. Things like that. What else? Home loans. We see this also with, what is it? Buy now, pay later.
Hmm.
So essentially, all of these loans, sorry, all the interest rate affects all of these loans, and these companies tack on a few, one or two interest rates, whatever it may be, for them to make money off of the money that was lent to them. If that makes sense, Mikey, you can like let
No,
me know if I'm just being confusing. It is a very confusing process, and I still am learning a lot. But
yeah, I was gonna say like most, I mean, even in your, studies, Federal Reserve is really only hit on in economic classes because the things that they do are highly related to that. Unless you take maybe like something within banking or whatever, maybe like a finance and banking or something like that, you don't really come across discussions around the Federal Reserve. Again, to reiterate, the Federal Reserve is not a part of the government. I think a lot of people, like I said, it's a huge misconception. They think those two are hand in hand. I think it just seems like that the way that the picture is painted, but the Federal Reserve's main job is to write the circulation of money, also how much money are given to these large banking institutions, and then also just creating, or not creating, correcting different economic factors. And that like kind of leads us into our next topic, which are recessions. So a lot of the times when interest rates change, this is to help mitigate recessions. A recession can be explained as far as like having two successive quarters of a low GDP. Um, GDP being gross domestic output, which can also be measured from a national level. So you can think like different countries' GDPs or a state level. Whichever state you reside in has its own GDP as well. GDP is mostly just any finished products or goods that the state produces, so forth and so on. Obviously, you can do your own research in what the GDP is and how it impacts you from both of those levels. People don't realize too is like there are certain states that outproduce as far as like a GDP standpoint than some countries here in the world. Um, a really interesting, I guess, economic viewpoint that is used um, and can be used to also explain like how each state operates, what its specialty is, and yeah, recession factors, which is one of the biggest things. So again, a recession is basically viewed from two successive quarters, and a quarter is about 3 months. So two of those with a low GDP output or a fall in GDP, essentially. This it shows a temporary economic decline in which trade and industrial factors are impacted. So the Federal Reserve, tying that back into it, um, fluctuates the interest rates to help mitigate possible recession factors. And that just helps overall lean towards, I guess, better economic outcomes. And then, like I said, inflation, interest rates, those are all measured on that quarterly basis. And so you'll see those fluctuate. The Federal Reserve's interest rates don't just impact loan things as far as like the cars and mortgage and all those other interest rates, but also you can see that impact the stock market. Depending on which way that goes, you can see the stock market um, being a bear, kind of essentially, which is on a decline as far as like whichever platform you're looking at, NYSE, NASDAQ, etc. But overall, those are some ways that you can visually see a recession. Also, recessions are most I think the last one, which was most people, as far as like our viewers, either remember or were probably early on within that, was between 2007 and 2009. Um, Most times, like I said, recessions can impact you from a, you know, business level and a personal level. But recessions are a really key factor as far as like helping push economic interest in certain, patterns to help correct those measures that were put into place beforehand. So it's reviewed on that quarterly basis to see the Federal Reserve says, hey, interest rates need to be a little bit higher so that we can mitigate the last quarter that we did. But if we see that back to back piece going there, those will lead to a more recessive factor as far as what we're looking at. Obviously, there's more that goes into that. Economic classes help. I think most of the things that I learned about the recession within my micro slash macroeconomic classes, but learn more about that, how it impacts you, and if you're a business owner too, how it impacts you as well. Like certain goods that you get, and things can be impacted by, those interest rates. But I'm gonna lean more into Tyler to kind of see his piece on that too as well.
Yeah, I think that's those are all good things. One thing that Mikey and I will send back and forth is a lot of people on I love to nerd out on YouTube videos and just learning that way. Maybe you didn't take economic classes in high school or college, or you may not have gone to college, whatever that may be. That's perfectly fine because guess what? We have the internet, which is just a bunch of free information, and as long
Mhm.
as you have the willpower and determination to go out and learn, you can learn anything, and it's the beauty of it. But a lot of people on, there's just different opinions on YouTube or wherever it may be, wherever you're finding information. They have different opinions on recessions and things like that. So I just highly recommend wa watching as many videos as possible and kind of just finding the common threads. And
Mhm.
then obviously there are more, um, how do you say it, this dependable sources. Investopedia is a good one. Things of that nature that teach more of the like, I guess, uh, study nature or textbook answers for
Mhm.
recessions, like Mikey said, two consecutive quarters back to back that are, what is it? You said a decline
And
in
GDP.
GDP. Um, but anyway, I just highly recommend. There's some successful financial gurus or people that are very knowledgeable that may have a negative view on the economy. I just highly recommend just be careful. The hard part is having enough time to have your own opinions about the economy and making investing decisions and things like that off of your knowledge. And we want to reach out and follow some of these investing quote unquote gurus or whatever, but at the end of the day, just highly recommend just be careful, especially when it comes to recession, because people are quick,
Mhm.
especially since COVID and especially since 2008. People are quick to call, oh, this is a recession. Everybody freaks out and starts to get fearful and
Mhm.
things like that. But that's when people, if we're talking about investing, that's when people recommend, you know, um, buy nonstop, whether it's the market top or the market bottom. They even out essentially, and so that's my thoughts on a recession.
No, those are some good pieces you hit on too, because like recessions can also, change the way that people invest, right? Whether they're doing like bonds versus the actual stock market. In a recession, you're not going to see that growth that you would get during like a regular period, I guess. So they'll go to probably a more safer option, which is those bonds. And that's a whole like another, piece of that too. But some things that you will see in a recession is, lower income, lower consumer spending. These are things that hurt the economy as it goes, right? For everything to work, all fine and dandy, people need to be getting paid, one. People need to also be spending that money, two. Um, because, right, whatever you buy as a consumer, that helps that GDP, I guess, measures. So overall, right, tying them all together in essentially as far as like, a high viewpoint of it, savings in general are going to help you, fight those factors. As far as interest rates goes and such, obviously they don't impact, your banking institution or whoever you bank with. But having different savings methods, savings accounts, high yield savings, or just different ways that you're putting your money to work, essentially. You don't want it to just be sitting because you come across this piece of a raised interest rate as far as from the Federal Reserve, and then now you're looking at different economic factors, and these economic factors could be something like a recession, right? And a recession, right, is measured by that GDP piece of two successive quarters, um, and a fall in GDP. So understanding all of these as far as like your day-to-day spending, how you plan to save, goal setting, short term, long term. Um, it's hard to be present and also, future thinking. You'll say, oh, I can, spend this here, spend that there. Um, just look at, it's a higher level viewpoint, exactly what it is, to be honest. You should always just be looking at what is best for you, what is best for your future self. A lot of times, if you're a student, right, you're just now getting into the world. Before that, you probably, weren't receiving a lot of money, or these economic factors, as far as like high interest rates, weren't directly impacting you. Maybe they're impacting your parents or your guardian. But those are some things that are never always communicated because a lot of times as a student, it doesn't impact you. So your parents probably don't say anything, or maybe you can see that through certain, spending habits that change within your household. But as you go through college and you graduate, and then you start to face some of these pressures of the working world, and just how everything is always financially related, these are going to be some key pieces that you're going to be like, I wish I knew about that as far as like these economic measurements, interest rates, and things. I think one of the also the key things that Tyler hit on is doing your own research. A lot of people have different opinions on those, three different aspects that we just hit on. What you need to do is make sure that the resource that you're viewing is not in a persuasive manner, but it's informative. It's giving you all the necessary details you need to make your own decisions and not trying to tell you which way you should be leaning. You should take all of that information and then say, okay, this is what I want to do as far as my takeaway, or however you're trying to utilize that information to help you in your own life. But yeah,
I'll,
so
I'll
go
say
ahead.
real quick, Mikey, sorry to interrupt you. One thing about interest rates, um, there's a lot of different opinions on politics, right?
Hmm.
The thing about interest rates is there's theories. We learned this in science class growing up, like if then statements. If
Hmm.
blank happens, then we think this will happen. So I think it's important for us all to know, just real quick, there are opinions within. That's the hardest thing about financial literacy education. There's different
Opinion.
opinions, and
Hmm.
we want to hear both sides. So just know whenever we're all learning about this, we're hearing things. There's some theories that, okay, if interest rates are increased by this much, then this will happen. Like those are not facts. Like those are opinions because they're
Hmm.
theories and it hasn't played out yet. So
Yeah,
I just
whenever they
cap.
change interest rates is just based off of previous data that says, if you fluctuate the interest rate this way or that way based on previous data, it should correct,
Right.
the market. But it's not yeah, this is what it's gonna do once it happens. So it's really just like a, what is it, the scientific method, like he was just saying that if then. So yeah, overall it's not really set in stone that, oh yeah, it's going to work once we, change that interest rate, because sometimes it doesn't. It really, anything as far as like monetary policies or anything that has economic influence, all the way down to the consumer level to the business level. Those interest rates only impact one side, but there's so many things that go into how the economy moves and fluctuates. So, yeah, some really good points. Overall, like I said, the biggest takeaway is to always do your own research. Don't let anybody, like even us too, like don't even, let this be as far as that. We just want to make sure that we're giving you the information to go and, do your own research points, right? Go look up where that GDP is, how that impacts. Go look up what those interest rates are, what the Federal Reserve does, all its banking institutions. I forgot how many that there are, but we learned that so many times. But they have their own regions as far as like what they do. Go look up who's the, current head of the Federal Reserve, and like what their term limits are and things like that. Obviously, at the end, like I said, they're not a government entity. They work on their own as far as like the things that they do. People always get that confused. If that's anything, it's a factual information piece there. But like I said, you should always do your own research. And then savings methods too. Savings doesn't mean just bank account savings. You can be saving by investing in yourself long term, retirement accounts, stock market, bonds. There's so many ways to save essentially. Our main emphasis is to make sure that you're saving in a way that fights inflation and helps you prepare for recession-like um, quarters or economic times. So, um, really, 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 really huge, I guess, key points or topics that you want to make sure that dive deep into or just get a generalization of. But that's all from me. Tyler, do you have anything to wrap us up?
No,
All
all
right.
good stuff.
Yeah. Well, we appreciate it. Thank you guys for tuning in. Obviously, you can check in with us next week. We'll keep on updating you as far as like all these topics that we hit on. Also, please let us know if there's anything else that you guys would like us to talk about, or what your opinions or things that you've learned in school about some of those key pieces that we mentioned. So we appreciate it, and thank you for
And
supporting ISO.
hey, feel free to always comment on our post or DM us. Like we're welcome to have some of these conversations over messages too. So,
Yeah, and you can find us at Innovative Start on Instagram. And then in our bio, we have all of our links to our social medias and how you can learn more about us. But no, we really appreciate you guys, and we really appreciate any support as far as feedback, or like I said, any of the topics that you hit on. And also let us know as far as like your own, personal finance or some of the things that you've learned. We would love to get some insights on some of the things that you guys feel like are important topics to hit on, or maybe important to your peers too as well. But yeah, that's all from us. We appreciate it.